evening. Welcome to Journey to Become Wealthy, Day 37. My name is Kelvin Reed, and we're here to discuss the market. Before we get too far into it, I want you guys to make sure you like and subscribe to the channel. Hit that bell to make sure you get notifications when I post videos. If you follow me on Instagram, hopefully you made some money today, right? So today, we discussed last night in the news was coming the job reports. We knew that the Fed will be posting the unemployment numbers, right? If we got good news, it will actually potentially push the market up. We got bad news, it will potentially push the market down. Well, if you guys did any trading today, you saw the market went down. However, it went down slightly. The market was still ended up being mixed. It still ended up being mixed and pretty flat. I also made some of the first purchases into some of those financial plays that we've been talking about this week. So let's go ahead and check this out. Stocks fall after disappointing jobs report. New York, CNN Business, the jobs recovery may be losing steam, but the unemployment rate continues to fall, and workers are still bringing home bigger paychecks. Investors don't seem sure what to think about mixed messages, so that's why I think it's flat today. It was mixed market. Stocks closed lower Friday after the U.S. government reported that 199,000 jobs were added in December, significantly less than economists expected. The Dow fell about 5 points in the day flat after giving up earlier gains. The S&P 500 ended down 0.4%, and the Nasdaq fell 1% to close a choppy trading day. Both indices had opened the session higher. So although the headline job numbers were disappointing, the government also said that wages rose 4.7% of the past 12 months. That could bode well for consumer spending, even as it may also be raising fears that the Federal Reserve will step up plans to raise rates in order to fight inflation. Now, a key point I saw right there, right? It said wages rose 4.7% over the past 12 months. What was inflation for the year? 6.8%. So that means 4.7% pay raises compared to 6.8% inflation. We still losing. We still losing. So inflation has definitely taken over, and that is another reason why it is so important that we start learning how to do these side things or how to make passive income, because apparently a job is not going to pay us enough to continue surviving. If inflation continues at this rate and the pay raises are only 4.7%, the gap continues to get wider for those of us who are on the lower pay scale, pay income. All right, let's check out the futures. Dow down 0.01%, S&P 500 down 0.41%, the Nasdaq's down 0.96%. You guys check out these pre-market movers. We had Dover Corp, which I believe this is the second time we may have heard of this one. It popped 17% today. So the positives, as you guys see here, far outweigh the negatives. And that actually happened for a lot of companies, what I saw today. However, it was still flat, still pretty flat as far as everything else. Look at the futures. The Hang Seng is actually up 1.74%. So apparently the China stock market continues to push up, and I love to hear that because again, I'm into companies that I want to see do well now, and that is Neo and Baba. Baba being, like I said, a retail, and Neo being an EV play. So that's all I have for there. And y'all saw the news. Let's check out the Russell. The Russell was down 1.20%. And that's major for the Russell, right? Again, we just having major big drop after big drop. So that's just going to show that the market's constantly coming down, right? And y'all know how we're gonna play that, right? We're gonna get into those financial companies, which apparently did well today, and we're going to put options if necessary. So let's check out our stock market heat map to kind of just get an overall look at how the entire market did, right? And we see pretty much mixed, right? You see some bright red, some bright green, a little bit everywhere. Nvidia, we saw it pop on yesterday. This joker came all the way back down. It gave back everything it got. It is down 3.30% in the tech sector. TSM down 3.87% in the tech sector. And pretty much, man, it's just the technology sector like it got beat up hard in semiconductors. Semiconductors got beat up pretty hard. Microsoft pretty flat. Again, it is one of our plays that we're going to look into getting into along with some financials. It is a safe tech play, Microsoft, and it's actually up 0.05%. Adobe's down 0.67%. Oracle up 1.35%. Nothing major. Apple, again, another one of the ones that we like. And if you guys were following my Instagram day, you guys should have saw I did a trade on that. I did a trade on that one. Yep. I did a call option. I got out at 20% and just the call option. The only reason I did that today is because we discussed the PayPal option on yesterday and how I would not have recommended it to a buddy. And I want to give somebody the chance to actually get in here and make some money in case you hadn't for the week, especially seeing how things are going. Financials. Y'all see all this pretty green? I got in, so today I got into Wells Fargo. I only got a small piece of it. I bought 4 shares. I got a small piece of it. I plan to build up a lot more than that. I told you guys I want to put about 5% of my portfolio in that. But in order to do that, I have to get out of some other place. So I got into this one using the money that I added today because again, consistency, right? When we get paid, we add to our portfolio. We're consistently building out our portfolio by adding cash. So I used cash that was added today in order to get into Wells Fargo and Goldman Sachs today, and also traded that option. So Wells Fargo was up 2.13%. Let's see. Also, another one you guys I'm putting on my list is Morgan Stanley to watch. I was looking through news, and they were saying Morgan Stanley may actually be in line to beat out what Goldman Sachs is gonna do. If you guys are looking for a cheaper stock to get in, you want to buy whole shares. Again, we know we can buy fractional shares or partial shares in companies that cost more than we can afford. However, if you are looking for a cheaper one, Morgan Stanley is on our list. I do believe I added it. If I did not add it, I do plan to add it, and it's going to be an option to go against Goldman Sachs, similar to what we have with Wells Fargo and Bank of America. But let's see, credit services and financials did bad. PayPal's down today, even though it was up yesterday. Visa's down today. Yeah, so we see financials doing good again. Again, financials and the banks diversified. It's pretty green. Got some pretty green colors in here. It looks like it did well today. And with no news, of course, outside of the Feds and the interest rates, the expected hike coming. Communication services looking pretty flat or down. Netflix came back down 2%. Charter Communications came down 3.40%, and Roku came all the way back down 6.92%. And let's not forget, Kathy Woods bought 166,000 shares, 166,000 shares yesterday, I believe it was. So the fact that that's coming down, it kind of, hey, I don't know. Maybe Kathy Woods knows something we don't. Maybe she bought more shares today at this lower price. Who knows? But she did what she did, and we just kind of looked into it. But communication service pretty red and pretty much flat though. For the most part, especially the major companies, just flat. Facebook or Meta platforms is pretty flat. Google's pretty flat. Healthcare actually shows a little green. Here's Pfizer again. I told you guys it's hanging out between $53 and $55. I don't see us making any money in it, to be honest, but I could be wrong. So I'm not gonna be getting into it. I don't think I'm actually gonna get into healthcare. I'm still looking. I'm still just waiting and watching to see what things are gonna do. For me, I think Johnson & Johnson may be a better play, seeing that it's actually more diversified as far as what it does as a company. So we know it. We know Johnson & Johnson has many products. I'm not aware of what kind of products Pfizer has. All I'm aware of is their vaccine and how they're having an impact on the virus and things like that. Merck & Co. Again, it's up 1.86%. And I said we were going to look into that. I definitely need to write that down and put that on my list as a company that we should probably look into. But the rest of the healthcare sector is pretty red outside of drug manufacturing. Energy again, oil and gas again, another green day. So if you guys want to, hey, ExxonMobil may be something to get into. PetroChina, again, be careful with the Chinese plays. BP up. So, and these stocks are not very expensive, so it may be something for you guys to look into. If you guys want to get into energy, you guys know, leave it in the comments. Let me know. We can definitely get into looking into those. Any company you guys want to look into, just let me know. Leave it in the comments and we'll get into it. So, consumer cyclical. I love to see Baba is constantly going up every day. JD.com also going up. It went up today. But Baba is the one that I'm in. Again, it's what I call the Chinese Amazon. Amazon's coming down today. Tesla's steady coming down. Y'all. Y'all know how I feel about it. If it comes down to that $800, $900 mark this year, I don't care what inflation says or what the stock market crash look like. I am going to be averaging into this joker. And when I say averaging in, I may buy it. My first one may be at $950 to say. It may keep coming down. My second share will be at $800 or $900. If it keeps coming down, I am going to keep buying in and keep trying to get it as low and as cheap as possible. And that's just what I'm gonna do. Same thing as what I do with Bitcoin, because this is a company that I believe in for the long term. If even if 2022 is a bad year for the stock market or the economy, there are way it is always going to be a return, right? It is up to the government and these big businesses. It is their job. It is their business to be profitable and make money for their investors and everyone else, or else they lose money as well. So they're going to figure out a way to make sure that we make money. It may not be this year as far as investing in these companies, but for sure 2023 or whatever, whenever it happens, but it's definitely going to happen. And again, this is a journey for me, right? So I'm not trying to get rich quick. I'm not trying to get rich overnight. I'm just trying to get there. I'm definitely trying to get there. And I want to bring you guys along with me. Consumer defensive, flat. Got some green in here, but pretty much flat. Real estate, pretty flat as usual. Utilities look like it's showing some green, but flat. And basic materials, I got some bright green in here. BHP group and BBL. They both BHP group, but so I'm not sure what they are, and they both have about the same increase. So again, if you guys want to get into any of those things, you guys let me know. I'm not very educated in the basic materials and utilities. However, it is not. I'm dedicated to this, so we definitely get in here and learn whatever needs to be learned. All right, let's move on to our crypto. Let's see what crypto is looking like today. As far as the ones that we were looking at, Bitcoin came down another 1.71% today. Ethereum came down 4.17% today. Again, buy zones for me. Continue to average down. Bring your price down, but when it goes back up, your profit is that much larger. Um, Cardano down 2%. Terra Luna down 6%. And I do plan to buy another $100 of this on tonight. It's coming. I first want to see how far it's gonna come down. I want to see it start to signal going back up before I actually get back in. Shiba Inu, I plan to buy more of this if I see it keep coming down until I want to catch it at that point right before it goes back up, so that I know that I caught what seems to be the bottom. Shiba Inu, Dogecoin came down 1.23%, and again, you guys know Dogecoin is just something that I don't think is gonna move unless it's for the next few years. Shiba Inu, again, I don't think it's gonna pop major, but it is has a prediction to lose a zero over the next year, over the next 12 months. So I'm looking forward to that. It loses a zero. So right now it's currently 4 zeros and 29. It's predicted to be 3 zeros and 28, I believe, over the next 12 months. Crypto.com or Crow is down 5.64%. I think I pretty much have my position in that established. Let's go check out our our metaverse plays, right? And that's Decentraland, Mana, and Sandbox. We saw Mana run up on yesterday, I believe, a total of about 13%, and today it lost 5% of that. And that's fine. Again, this is one that I'm looking for the long term as the metaverse continues to be built up and continues to perform. I do believe that this stock price will continue to rise. And same with Sandbox. Sandbox came down 2.27% on today. So again, these are companies that I'm looking for over the next few years as the metaverse continues to build out, more people gain interest, and it continues to grow. I expect these coins to actually increase in value. I expect them to become even more unique and be worth that much more. Yeah, so that's what we got in crypto. And I guess we can look at it in the heat map form, right? Just so you guys kind of see the overall, similar to what we did for the stock market, right? I know you guys like to look at this. It's pretty red colors. You know, instead of having to look at the percentages and the prices, it makes you look good. So you got Link is up. I'm not sure what chain Link is, but we can look into that if you guys want to. Stellar is up, and Doge is showing up. Axie Infinity and Theta. So, and this one here, I'm not sure what it is. It's not showing the highlight. But yeah, so these are the companies that are actually showing up. So, hey, if you guys want to look into any of these, you guys know of anything, any other NFTs that you guys are interested in, you guys know to let me know, and we can definitely investigate and look into these and see where we want to get into it. So, again, I was working on this again today. Here, earlier, on yesterday, I had an entry price that was through range, right? So instead of me doing that, I'm simplifying it for anyone, right? And these are the prices. I want to buy it below this price. I'm not telling you, this is what I'm doing, right? I want to get it below these prices. Goldman Sachs, I bought it today, I want to say at $397. However, that is me just getting in my first piece of it. Wells Fargo, I bought it today at $54.66. So now my entry price, my real entry price, where I'm really gonna start establishing my position for Wells Fargo is $47. However, it has a fair value of $55. So at a fair value of $55, I bought it at 54.62 today, I believe. Matter of fact, let's just look at it, right? I bought it at 54.66. 54.66. And it has a fair valuation of $55. So I still got it lower than its fair valuation, and it still has a lot of room to grow, especially in a year like this year where I'm pretty sure the price predictions are going to change. Analysts are going to be taking closer looks at the financials, and they'll be changing the price predictions on these. So I went ahead and got a piece of it, right? And I'm going to continue to average into it every time I get paid and continue to build out my position until I hit that 5% mark. And you guys see I added Morgan Stanley here to be number 2 with Goldman Sachs. So, and that is because Goldman Sachs 350 is my entry price. Below that, and I think it actually has a fair value of about 350. However, I got in here at let's see what I got in here at 397 is what I said. I got in here at 397.52. 397.52. Now it may or may not ever come back down to these prices. It may or may not come back down to these prices. So I'll continue to average in as it goes up. And if it comes down, that is when I'll load the boat on these companies. That is when I will load the boat. These are the prices though that I really want to pay for them. However, I'm gonna give me a piece of the pie just to keep it in there. Just to continue to hedge against all the text and all the bad, because as you see, pretty much everything else was in the red as that one continued to be green. That one continued to be green. A lot of other things were red, but some financials and some of these other companies were in the green. Financials and my MO and all of those are in the green. So that is why I'm sticking with it, right? I'm going to stick with those. Yeah. So that is what we have, right? I bought me some Wells Fargo and I bought me some Goldman Sachs today, and I traded an Apple option. So let me see if I can pull up my phone screen for you guys, because I told you guys I was going to show you the play that I did today. I made a play today on Apple. It was an Apple play. I made an Apple play today, and what we did was we traded. We made about 20% on an Apple call option. We made 20% on an Apple call option. And it was a simple option, actually. I saw it come down to that price where we know 171 is where it bounces off, and it tends to come back up most times. So I bought it there, and I waited on it to come back up. So, and that is what we did. So let's see if I can get my screen pulled up. If not, then I'll show you guys this another time. And also, if you follow me on Instagram, you should have seen it go live. You should have seen it live being posted there. All right, so here I got the screenshot up. I had to pause and get this thing together, but here's the screenshot, right? It's an Apple $175 call expiring on January 21st, and the last trade on it was $224. My average price was $227. And again, I saw it had got to the bottom point, and I saw it making its way back up. So I bought in here at the 227. And I sold out after seeing 22%. I got out of it. I made 20%. You guys know 20%. And I saw it actually start to come back down at this 22% mark. So that is where I got out. I got $52 and I got cut and lost. Now again, you guys have to imagine this on a bigger scale, right? This cost me $227. I made $52. Imagine if I'd bought 5 of these, right? So let's pull up our calculator. And of course, we know 5 times 5 is 25, right? If I'd bought 5 of these, let's see how much it would have cost us, right? So 2.27 times 5. It would have cost us $1,135 to get 5 of these, right? But that same $1,100 would have got us 52 times 5. It would have made us $260. So again, as we take things on a bigger scale, we make more money. We make more money on a bigger scale. So that's just something to be aware of as we continue to do this thing into the future. Of course, I'm doing these on smaller scales, or at least I'm posting on smaller scales. I want you guys to see the potential. I want you guys to see the amount of money that can be made as we continue to do this and we continue to play in the stock market. So that's what I have for you guys today. And it's Friday, right? Tomorrow is Saturday. There's no active trading in the stock market. We know that crypto can be traded if you guys want to get in there and play with some crypto, but we don't have any catalyst that's gonna make. I don't know of any that's gonna make crypto currently run up. But you guys keep your eyes open for it and let me know if you see it, or we can try and get in there and trade these together. That way nobody actually loses any money. We all want to make money together doing this. Also, new wealthy word of the day coming out tomorrow. Every Saturday, wealthy word of the week. Wealthy word of the week will be out tomorrow, and I'm plotting it. For this week, let's not forget desire. Also, just because the word ends for the week, let's not forget, right? We need to desire our goal every day this year. Let the word desire. You need to have a burning desire for whatever your goal is. Make sure you guys continue to work hard and strive for whatever it is that you desire. You need to have a burning desire for it. But yeah, that's all I got. I thank you guys for joining me on the journey to become wealthy, day 37. Hope you guys have a great weekend, and I'll be seeing you tomorrow.